The slides from the February investors briefing at Nintendo are now available to see, and the February meeting is always a particularly significant quarterly update as it factors in their biggest sales period of the year, the holiday period. In this video, I'm going to go through slide by slide, breaking down what there is, examining how Nintendo is doing, and picking out any interesting details along the way. So please like, subscribe, and settle in for a Nintendo Forecast deep dive into the February 2025 Investor Report. This document covers the period from April 2024 to the end of December 2024, and the comparisons being made are with April 2023 to December 2023. Obviously, 2023 had some fairly major moves for the company, with the April 2023 debut of the Super Mario Bros. Movie, the May release of Zelda Tears of the Kingdom, and October seeing Super Mario Bros. Wonder. Therefore, it's not a huge surprise that Nintendo is down in terms of profitability here, with this slide first showing all sorts of measures taking a tumble. Note the net profit ratio, basically a measure that is the profit divided by the revenue expressed as a percentage, and thereby a way to see the actual profit margin Nintendo is making. This is an interesting one here, as while a drop in profitability might simply be a function of the decline in sales relative to the amount being spent on advertising and promotion, one would imagine that the games and machines they be shifting would be at relatively high margins. So I wonder if some of this is reflective of the costs incurred in this quarter of gearing up to manufacture the new machine. Consolidated sales are down, but what I find interesting is that they are down more or less consistently by percentage. Actually, in the second quarterly update, they noticed that mobile and IP-related income was down much more significantly compared to the previous April to September. So I think a lot of the mobile and IP-related income drop is at the feet of the Mario movie inflating the 2023 numbers. The mobile and IP-related income figure was 39.8 billion yen in the equivalent 3 quarters in 2021 and 38.9 billion yen for the same period in 2022. While of course they've been soft pedaling in the mobile space for a while, the IP-related income stream has been huge for them, and I might have expected this holiday season to be rather bigger for them. I wonder if Nintendo will feel a little disappointed that the Super Mario Bros. Movie, plus all their theme park and other ventures, don't seem to have changed their resting pulse rate of how much this segment of their pie earns very much. Of course, I'm not sure that I personally saw much in the way of IP initiatives during this period, with the exception of the Donkey Kong Park opening, which was an expansion that only happened in the final 3 weeks of the period anyway, plus of course the Nintendo Museum, which was a fairly small operation. Also, the merchandising sales were up from 8.5 billion yen to 10.9 billion yen, figures which themselves are up on the 2.1 billion yen and 4.1 billion yen from the preceding years, 2021 and 2022, for the equivalent quarters. Although it's a relatively small part of the Nintendo picture right now, if they can continue this rate of growth of roughly 2 billion yen per year, it could start to become more significant. Note also, though, that exchange rate changes have an impact of 43.7 billion yen in Nintendo's favour. This is smaller than some of the previous years, but still shows that Nintendo know they are in a relatively benign position under current market conditions. There's quite a bit of interest in America for devaluing the dollar, which would have positive impacts for American manufacturing as it would lower their prices internationally and promote exporting. But this is difficult to achieve, and luckily for Nintendo, it seems relatively unlikely that there will be too drastic a weakening of the dollar compared to the yen for the next few months at least, which means that they can make their sales of Switch 2 and recoup their costs. Still, while we're looking back on this period as a great one for Nintendo anyway, I think some of the headline figures may be slightly overstated because of their reliance on a really great exchange. The pie chart of the regional sales ratio is always one that I find very interesting. 2 years ago, the proportion of sales outside Japan was 76.4%, so nearly identical, but the makeup was a little different. The European proportion is 0.4% up on 2 years ago, the American sales 0.8% up, and other regional sales 1.1% down, which is a fairly significant change. Do recent changes in China have a bearing on this, I wonder, or is it just a factor of the age of the console to the extent that they've stopped aggressive initiatives to push into new territories, as it would seem like a Pyrrhic victory at this late stage to be too successful with a console that is, after all, in its final stages? The gross profit slide is an interesting one to me, mainly for the breakdown of the variables. The proportion of first-party hardware sales is up, but this is potentially a little misleading since it is a big-ticket item, and as Nintendo sales are shrinking, it's not too surprising, perhaps, that such an item might take up a greater proportion of the sales. However, the proportion of first-party digital sales is down to 73.4%, further down than the 77.7% and 79.4% seen in 2021 and 2022, although the percentage drop is primarily, I suspect, as a result of the release of two such vast first-party titles in 2023 as Tears of the Kingdom and Super Mario Bros. Wonder, with 2024 have nothing of equivalent scale to its name. The proportion of digital sales creeps inexorably up as well. They accounted for 40.2% at this point in 2021. Note, though, that in the first 2 quarters of the year, digital sales represented 56.3% of their market, and this apparent dip now can be accounted for by the huge swing towards physical media over the holiday sales window. I would expect the digital proportion to rise a little in the full financial year figures, but I guess the really interesting figures are going to be over the coming year, where we see if the new console precipitates a significant change in behavior with regard to digital purchasing. Selling, general and administrative expenses slides follow in the same trend as previously, but what I find particularly interesting here is the change in R&D and advertising expenses. Nintendo spent 68.9 billion yen on R&D in the equivalent period in 2021, 78.3 billion yen in 2022, so for it now to shoot up to 92.3 billion in 2023 and 104.7 billion yen in 2024 is telling. I'm not really sure how much these research and development costs accrue to the Switch 2 specifically, since we know that Nintendo have multiple other projects, and presumably costs for the development of the museum, Alamo, Nintendo Music and the theme park attractions would have featured in these budgets. The second quarter financial suggests R&D costs were 15.5% up, whereas these now stand at just 13.4%, suggesting that a good deal of the budget had been taken up with Switch 2, and I guess in the October to December 2024 quarter, Switch 2 ceased to be a research and development priority as it was being transitioned into production. The key for Nintendo here is whether it can maintain high R&D investment going forward, especially as it puts into the rearview mirror one of their all-time most successful console generations. Advertising is also down, but most of this seems to be because there was less to advertise compared to 2023's heavy hitters. It seems they spent 39.4 billion yen in last year's holiday quarter and only 32.9 billion yen this quarter. I thought they might push out the boat a little more, given that this is the victory lap year for the Switch, but perhaps they felt that the return on investment was not significant enough to get too aggressive with their advertising. Then we have another slide showing the ordinary and net profit, and we see the foreign exchange gains, more modest than previous years, probably because of that wobble around August, but still a decent percentage of their income. The consolidated financial forecast is something we've been looking at for some time. They've modified down all their estimations though, so this one must have been a relatively hard one for them to deliver. It's not just that the sales and profits are down, the shareholders' dividend forecast is also subtly down, although still considerably up on a few years before, and in line with the kind of adjustments that have often been made in this period previously. Most significant for our purposes, though, is the hardware forecast, where the forecast has been revised downward again to only 11 million Switch units. This suggests that Nintendo was overconfident at the beginning of the year about their ability to keep pushing the Switch 1, and I wonder if this may factor into their willingness to keep the Switch 1 alive for longer as a secondary console in the manner of the 3DS during the early Switch era, something that I will address more in a separate video. Software numbers are only marginally down though and still look pretty healthy all things considered, but generally these statistics lag the software by about a year or two. These figures imply that they feel themselves on track for about 152 million Switches sold by the end of the financial year. For those keeping track of how this compares to the DS and the PlayStation 2, it seems quite plausible to me that the Switch decline could be shallow enough over the next few years that it could cross 155 million even by the end of the next financial year, putting the DS in the shade, although Sony's airy ambiguity about the precise PlayStation 2 sales numbers may keep Nintendo from being able to claim a clear victory on that score. Okay, let's look at the business highlights, which is always my favourite part of the presentations. Hardware is down, no doubt. The Switch Lite has actually proven decently resilient, perhaps due to the special edition for Echoes of Wisdom, but it is still a smaller proportion of the sales compared to last holiday, 15% compared to 18%. As Nintendo note elsewhere, the OLED has a lower margin than the other consoles, so it is perhaps in their interests to keep pushing the previous versions, despite the apparent success of OLED as the most favoured model. The sales numbers include some pleasant surprises, notably Echoes of Wisdom. I love 2D Zelda, but they haven't always been gangbuster sellers, and so seeing this crack 3.91 million in its first holiday is a pleasant surprise to me. Also, I forecast back in 2023 that the Switch would have 3 more games to crack 5 million sales, and Super Mario Party Jamboree takes the second slot, the first being Super Mario Bros. Wonder. The third, I suspect, will be Pokemon Legends ZA, but that's for the future. Switch Sports and Mario Kart 8 Deluxe continue to soar, benefiting, I've no doubt, from being pack-in titles in some territories. I did a video a few weeks ago exploring some of the variations in Nintendo's pack-in titles. This chart showing hardware sell-through is interesting because it shows that there is quite a gradual trend downward. Now, this is not uncommon until a console is superseded, where the numbers tend to fall quite sharply, but even allowing for this, it's possible to imagine that Nintendo could still be selling a small amount of Switch consoles for quite a few years. You can also kind of see the thought process that allowed them to justify their inflated forecasts, with the 2023 figures not significantly lower than 2022, and their forecast would have been in line with this shallower decline. But of course, the presence of such major games and events in 2023 accounted for this incredible performance. Nintendo couldn't really have forecast any lower at the time without subtly tipping their hand that the year ahead would be a slow one, and so they kind of had to project confidence. The forecast was of course justifiable in its own terms, as it followed the tramline of the previous years, but it was, in retrospect, obviously being optimistic. The annual playing users has crept up to 129 million. This, in some ways, is an indication of the true number of Switches out there once you factor out people with multiple consoles. For sales of first-party titles, this is their weakest holiday since 2019, but it has to be said, 2019 had an absolutely incredible lineup. Zelda Link's Awakening, Ring Fit Adventure, Luigi's Mansion 3, The Stretchers, Pokemon Sword and Shield, and Mario and Sonic at the Olympics. 2024's didn't compare at all in terms of content, and so I think they can be decently pleased despite the apparent drop-off. Mario and Luigi Brothership racked up 1.4 million in sales. This is relatively low for a Mario game and below the 2 million target that reportedly is their back-of-an-envelope estimate for what a mid-sized Nintendo game should make, but I don't think Nintendo will be too worried. For one thing, Mario games have a much longer sales tail than other titles, not just on Switch, but also with the potential to be remounted and resold later on. Plus, this was the third Mario RPG in the space of 13 months, and even Nintendo had to recognise that they were pushing their luck here. Its critical reception was also a little more muted than other titles in the series, and of course there's a bit of an asterisk over whether Nintendo will be able to use the same developers acquire, given that Sony has shown interest in acquiring their parent company, Kadokawa. As it happens, in December, they made a significant investment of 50 billion yen, but short of the 640 billion yen a full Sony takeover would cost, though it sets Sony off in a good position if they decide to make any future move to buy Kadokawa. Kadokawa reportedly only wanted a deal for the whole company, but Sony wasn't necessarily interested in the whole of it, rather focusing on particular aspects such as the Elden Ring developers. When Sony is feeling more cash rich, they may take another swing, but they may simply have cooled on the idea. If Acquire isn't of interest to Sony even when they do decide to purchase, it's even possible that Nintendo could step in to purchase Acquire. Until that point, though, if Nintendo commissions Acquire to work on another title, it would seem odd and needlessly churlish for Sony, even if they do acquire Kadokawa in the next year, to terminate a game some way into development that could see profits for them. So I think there has to be a 70% chance that the next Mario and Luigi game will be coming in the next 5 years, and a 50% chance it will be made by Acquire, still, as presumably decisions about moving forward with the next title will be happening round about now. This slide is great because it is a real victory lap for Super Mario Party Jamboree. I am glad, as Jamboree shows that a high-effort Mario Party pays off, although I suspect it largely did as well as it did due to the high install base and relative lack of competition in the holiday season. Mario Party has always been a decent seller for Nintendo, but the franchise's success in the Switch era has been phenomenal. And when we talk about the Switch effect, while we often discuss Zelda, Pikmin and Metroid, I think Mario Party may be one of the franchises that they're most pleased to see pushed out into the big time, given how it reinforces the Mario brand and reaches large numbers of players who might not otherwise play video games. The digital sales breakdown is interesting mainly for the little indicators of how download-only software compares to digital versions of Nintendo games. Digital-only successes included Kirby's Dream Buffet, the Pokemon Scarlet and Violet DLC, and Nintendo Switch Online, which of course launched Nintendo Music in this period. But it's notable, though, that there was no major 2024 initiative in this category. Kirby and the Pokemon DLC were both 2023 games, so the relative resilience of download-only software and add-on content is fairly impressive. In percentage terms, I calculate 39% of digital sales as being download-only content this year compared to 48% last year, but that's with almost nothing new being released, showing how much steady NSO sales must be steadying the ship. Then we get a preview of first-party titles for 2025. I think Metroid Prime 4 should have some kind of award for being in nearly every one of these future glimpses for years, but nevertheless, it's nothing we didn't already know. Switch 2 also gets its own slide, of course, and even though it's still a digital mock-up rather than anything photographic, it does look mighty fine here. We get a reiteration as well of the direct date, and Nintendo has clarified April the 2nd above the announcement date, perhaps after hearing the date confusion. There's a mention of the Switch 2 experience events, but nothing more specific. Beyond that, we get some references to the new Donkey Kong Country areas of Super Nintendo World in Japan, and a reference to the Orlando version in May 2025. The art features classic Donkey Kong, but it will be interesting to see if by then Donkey Kong is swapped out for a more modern version. Then we get into the real small print, but this is interesting as it includes region-by-region breakdowns. What is curious is that it appears they lost money on other activities, including merchandising in other regions. Quite why they should have a negative sales here is curious. The chart seems to be for sales rather than profits, which might naturally dip due to startup costs for the pop-up stores, although perhaps it relates more to moves in China, which perhaps led to the announcement that Tencent would close online Nintendo services to the Chinese in 2026. It also seems that in Japan, their mobile and IP-related income has remained far more buoyant than elsewhere, but perhaps given the Nintendo Museum and the Donkey Kong expansion, that's not a surprise, since a lot more has been put into Japan. There are also some statistics for particular aspects such as digital sales, proportion of hardware sales, and so on, but I don't know that there's anything significant in here that we haven't discussed previously. We then get a confirmation of the life-to-date figures and the forecast for the Switch 2. Rather curious is the estimate for software sales, which works out as about 26 million pieces of software they expect to shift in the January to March quarter. This is lower than the roughly 70 million they managed from April to September last year. Of course, the only software currently slated for the final quarter is Donkey Kong Country Returns HD and Xenoblade Chronicles X Definitive Edition, and sales of existing titles often take a bit of a dip in the new year after the holiday rush. I don't think anyone was expecting them to stealth announce a massive new title before the end of the financial year, but there's certainly no indication of them pulling a Super Mario 3D All-Stars style shock here, as we once thought they might need to do to meet their ambitious sales targets. Then we get an update on the million sellers for the year. No sign, regrettably, of Famicom Detective Club or even old faves like Advance Wars and Another Code. Also surprisingly modest to my way of thinking is Super Mario Bros. Wonder. 2.07 million is not to be sniffed at, of course, but it is still a relatively new game and in the prestigious Mario series, and has been a pack-in title across quite a few territories. And yet it still trails Animal Crossing New Horizons, a game Nintendo seems quite disinterested in continuing to promote. I recently did a video on Nintendo's landing pages noting that the DLC wasn't even mentioned on the Animal Crossing website there. Speaking of hangers-on, good old Super Mario Odyssey is still clinging on in there. Luigi's Mansion 2 HD's 1.84 million sales is not a surprise, and while it made, I've no doubt, a good return on investment, since it was not the most radical of remasters, I wonder if they hope to clip 2 million on that, given the success of Luigi's Mansion 3, and indeed, they still may in the years to come. But the games that really surprised me are the Legend of Zelda games. Breath of the Wild is an old game, but Tears of the Kingdom was not even a year old at the start of this financial year, and so the fact that the game seemed to have run out of road so quickly, at least in terms of being in the 1 million sale category, is a little sad. I don't think it will change Nintendo's strategies much at all. Zelda's success of recent years is still huge compared to franchise history, and the fact that Tears of the Kingdom could scoop 20 million sales within such a short time period makes the franchise one of Nintendo's most valuable all the same. In some respects, it's even beneficial for Zelda games to sell big in shorter windows compared to some of the evergreen titles like Animal Crossing and Switch Sports. It means we're more likely to see a drumbeat of new games, as releasing more new games is a more effective way to monetize Zelda compared to some of these other titles, where new titles might risk cannibalizing the sales of the existing games, which were already pulling in decent numbers. Just one more thing of significance: under the launch schedule of primary Nintendo products section, it is now divided into Switch and Switch 2 for the very first time. There's nothing besides the Switch 2 itself in the Switch 2 section. Not even Mario Kart receives a mention, suggesting that Nintendo don't consider this game as having been truly revealed just yet. By the next investor briefing, I think we can expect this box to be filled out considerably. That is a wrap for now. Do check out the Patreon, like, share, comment and subscribe, and I shall see you next time for another Nintendo Forecast.